So, a September update on the dividend portfolio. I've added some more money, which I will be covering, but also a little bit of volatility as Hilton Foods crashed quite a lot, 18%, a bit of an overreaction, but we will go into that as well. And we also got to consider and talk about the upcoming budget in November, which could have potential issues regarding expenditure of ISAs or maybe more stamp duty, less stamp duty. We don't know yet, but we can always speculate. If you want to follow along in the journey, please do leave a subscribe and more importantly, leave a like and a comment. Let me know if you are worried about the upcoming budget. So first off, I have added £800 so far this month to the portfolio. Now, it was a good day to do it because it was a bit of a lull on a low day because of something that didn't happen, which we will come on to in a minute. However, overall, the yield is still pretty decent on this portfolio. I will go through the full figures and facts at the end because ultimately it showcases it better. But yeah, the thing what I've noticed over the last month, and we'll talk about some technical analysis as well, which will probably bamboozle some of you, it's a bit of a shitty time period for some stocks. Even though the FTSE 100 is at the highs right now, we are in a bit of a, I wouldn't say nasty correction, but it's not great. It's not ideal. So we're down 2.2% rate of return from the last month, so to speak. So it's nothing crazy, but we still have some monies left over in terms of what we can dollar cost average in if it gets low enough. If it gets lower and lower, I will be putting more and more money in aggressively because more importantly, I'd want to use it up at the lows instead of at the highs, obviously. So yeah, we'll see where we go from here. But first, let's talk about the little elephant in the room, which is all to do with fish, funny enough. So in my viewpoint, I think this is a huge overreaction to a lot of things, and we've got to talk about it because we could talk about elections and we could talk about Brexit or who's in power, what the chancellors are going to do. But the reality is here, a lot of this was because of rising seafood of, raw material prices, right, in Greece, right? That's one element of this. The other element is the fact of obviously the earnings. The company expected an adjusted pre-tax profit between 76.8 million to and 81 million pounds, but they missed out just by the skin of the bollock. Not even joking. It was tiny. It was minuscule, which is absolutely mental when you think about it. So their operating profit marginally fell. Marginally is the word. But the overall growth of the revenue of the company grew by 7.6%. So it just blows my brains how operating revenue as a company is 7.6% up, but marginally miss on profit, marginally. But I understand the bigger picture. It is the fact that there is a supply chain element here that has created a bit of a problem, and it could actually be pretty much easily fixed. But looking on Stockopedia, you can see the obvious in the room here. What's happened here in terms of the stock rating? Well, value of the company has actually increased. Obviously here, sorry, plus 18, and then the momentum has shot down massively because that price has just majorly nuked over the last day or so. So it's not terrible. It's not horrendous. I'm not jumping out of here. And the dividends are still rising. It's still there. It's absolutely fine. So yeah, personal opinion, we'll look at the chart in a bit. I think it's just one huge overreaction. But here's the thing, right? With a dividend portfolio, it's never going to be simple. It's never going to be up only. It's never going to be dividend compound and that's off we go. You're going to get bumps in the road. The key question is it safe? Is the dividend safe? And the company have announced that dividends will be safe because more importantly, they've raised it. The long-term element here is we always need food. They're not going to go anywhere. So I know people will always look, oh my God, it's down like 18%. Realistically, you got the consensus of everything. Everyone's still interested in this. But it's also a great reminder of do not go all in. Hilton Foods is about 4% of my entire portfolio, which is pretty small. Shall we talk about taxes? Because I think we have to look at this. We will probably talk about this a lot more in future upcoming videos, so we keep an eye on it. But obviously, the whole headline is it's later than usual, right? And the economy isn't broken, but it isn't working well enough. Well, it's not fucking spending then, basically. So that's the situation we find ourselves in. So yeah, we have got the budget coming up. We could talk about dividend tax. We could talk about capital gains tax. We could talk about ISA allowances. We could talk about all kinds of elements that could affect the UK market completely. But that's speculating. But here's the thing, right? Often you find in the headlines, it's going to be the worst budget ever. And then it tends to kind of blow away a little bit. And that's the thing. When you look at the FTSE 100, we look at certain situations. It is currently at all-time highs. That's very, very interesting. Obviously, the FX market could be a huge factor in this as well, but the bond market isn't doing great. We know that. So we need to be very, very mindful of what we do go into and what we look at and what, investment risk we could look at. This is why I see a lot of content creators in the YouTube world, especially in the finance, I wouldn't say crapping themselves, but a lot of people are going away from individual stocks and more into funds just to kind of, make it a little bit squeaky safe. But we'll see what happens. We'll see. But overall, we're going to get a little couple of drips and leaks here and there. We've already had one big leak, which was about the ISA allowances. Remember that one, the cash one? We're going to bin it. Well, that soon went away. Now let's talk about some technical analysis. I'll try not to go too crazy if you're not into this sort of thing. But more importantly, that we need to look at is where we are in relative to individual stocks, and more importantly, the FTSE 100. There's a link below to TradingView, by the way, if you're interested. There's all the links in my pinned comment to all the stuff that I use, whether it's Stockopedia, whether it's Snowball. And this is the thing. When you look at the obvious in the room, the FTSE 100 is doing fantastically well over the course of the last God knows how long. It's probably been the best it's been for a very, very, as you can see, overall, don't have the most amount of data here, but more importantly, we are doing incredibly well. The situation we've got to look at is, why did stuff like this just nuke? And this is what is a little bit concerning for most people. The thing is, right, and we talked about it before, often you get situations where things will just drop and then they recover. We've done the same sort of situation here. To me, it feels like a massive overreaction, right? Yes, you could argue certain things around this period. We know what happened here. If you go back in time, you'll know. Let me just point it out for you. This one marries up very nicely to that freaking horrible candle, but you get the idea. So yeah, massive overreaction, obviously recovered, but not every stock looks like this. The good thing is, as I said before, the dividends are still being paid. But overall, as you can see here, the situation is with funds and stock market funds, the dividend fund is still doing pretty well, still growing quite nicely. And overall, yes, it's going down a little bit, but it's somewhat very cyclical. It just depends on where you are. In terms of overall volatility and getting paid, it's not amazing, obviously, but more importantly, we are chugging up. We could be going through a bit of a bullish spell here, which could be very, very interesting. And the same with the other one here, the FTSE 100. This is looking really good, and it does pay a decent dividend. So it's not bad, it's not terrible. It could be a lot worse, but are we going through a little bit of a bullish spell with the UK market here? Potentially, yeah. Now, overall, with the entire portfolio itself as a bit of a snapshot, this is where we are. We're looking okay. Not amazing. The profit side of it, okay. Yeah, I've made some money elsewhere, prior to the pie. But in terms of the passive income, 4.34% now, in terms of the yield of this portfolio, is really, really nice versus when I first started. If you remember what it was at the start, you'll know it was like 2.6. Overall, though, as you can imagine, yes, the amount of payment is obviously increasing. It's across the board. But the goal still hasn't changed much, which is good, which is what we want to see. Obviously, it's very, very early. We need to look at a longer term. But as I've alluded to before, as we get the passive income right in terms of the amount of dividend growth, the amount of yield here, we're going to start seeing that this portfolio will start to compound, especially by 2030. We're looking at roughly £11,000 per year potentially getting put into our pocket via dividends, providing everything stays on track regarding those yields. But mentioned before, the diversification element to this entire portfolio is key to stop you from getting blown up. That's the thing. If you're interested in copying, there will be a link below for the pie if you are interested in the description. But most of it is the ETF. Then you've got the City of London Investment Group as well, which is also another kind of it's obviously a trust. But other bigger companies are at the top here because they're better performing ones, and more importantly, the dividend yield's higher. But luckily, Hilton, as I say, it's just a little scratch in terms of the portfolio, nothing too crazy, which is why you want that. But overall, the dividend yield is a little bit lower only because of this one, the Hilton Group. So maybe it might be worth reinvesting a bit more at the lows if you still believe in the longer term value of it, but it's entirely up to you, of course. But yeah, overall, I am considering buying more this month. I have got some spare capital left over, so some stuff's all right, some stuff isn't. It just depends on what it is. But at the end of the day, this could be a lot worse given the market conditions that we found ourselves, especially with the world of tariffs and all the jeopardy around certain things, especially in the UK. It still feels like a bit of a car crash. But even off the back of how terrible that news has been, we're still at 81 for what I'm looking at in terms of my rank. I know you can just about see it around my head here. But yeah, it's still looking all right. We are still outperforming certain things, which is important. So yeah, we just got to be a bit patient with this and not flap too much. But personally, I see Hilton Foods recovering. It may be quite slow and sluggish, but ultimately, dips are there to be bought, especially if you're a long-term investor, especially in markets like this. You've just got to stay put. So there you go. That's the update. New cash added. Hilton Foods has obviously had a wobble, and the budget on obviously on the horizon, which we need to really keep an eye on. I will be documenting this as normal, and I hope you do enjoy it. If you want more videos regarding funds to buy or uses around Stockopedia or Snowball in terms of how to get more out of your portfolio, let me know. And the links are below to everything that I use here, so you don't have to worry about it. And if you want to see the full stock market breakdown of what I'm holding currently, it's all here.